Sorry, I'm recording it now. If you're watching this, apologies. You only missed like 2 minutes. But anyways, but this is why I'm torn, because if you're looking from this monthly perspective, we went back in time last night and we went through each of these imbalances that were formed. And every time we got into one on the first attempt, didn't matter if it was discounted or in premium of our specific range, we had a reaction to that imbalance on the monthly time frame, right? If I could just kind of briefly just run through, there would be one, right? There's your bounce from it. Here's your second. There's your bounce from it, right? So just because it's not in discount, right? These are ideal for us, these discount imbalances. But you'll notice that each time that we've had them, even in premium, we still do get some sort of reaction. So it's really just throwing me for a loop at this point, because while again our whole weekly game plan for weeks was wait for the bearish imbalance to form on the weekly, and then from that point I'm looking for lower, right? Which still might be valid. But I think it's also fair to note that we can go back historically and go through each one of these imbalances that we formed on the upside. And every time we get into a monthly imbalance, it typically leads to a bounce, right? And this is just using historical data that's available to everybody, right? Here's an imbalance. There's your tap into it. There's your reaction, right? Doesn't matter if it's in premium or discount of our specific range. We're just looking at this from a wide lens, right? Here's another instance, right? There's your, hold on. I'm sorry. There's one right here. Bullish imbalance on the monthly. There's your bounce from it, right? Every single time. You don't really flush these, no problem. Bullish imbalance, there's your bounce, and so on. I mean, we can go back all the way, however long you guys want to go back in terms of time. But you'll notice every single time we form one of these, we typically don't melt them without giving us some sort of bounce through, right? And that's just kind of where I'm torn at the moment, and that's why I don't have such a clear-cut draw on liquidity. And that's why you'll notice that the trades I've been taking and the ones that I've been sending in, they've been, not numerically, not really close to the wins that I've been posting in the past. Also, they're much shorter in terms of how many points they are, right? And how aggressive I am with moving that stop and profit, right? As from the beginning of this group, the way that I've kind of broken down how I can get to a specific goal, right? And this is not a rigid goal. This is not I need this, or if I don't get it, I'm quitting, I'm done for the day. Like, it's not like that, right? If the setup presents itself and I'm well above my daily goal, I'm probably going to take it again. That's not going to deter me from taking a setup that I have the utmost confidence in. If it doesn't work out, so be it. But on the flip side of that, if I'm not at my goal and nothing is presenting itself, I have to have the willpower to just avoid it. I don't need to trade that, right? I can avoid that, no problem. We're all good. But with that being said, that goal, or what we kind of spoke on in the past was, I know that if I'm trading futures and I'm trading NASDAQ, right? If I hit 20 points, which today's end of day move, you have like a 250 point run higher and a 250 point dump, right? So just to have an understanding of how many points NASDAQ tends to move, right? But I know that if I can hit 20 points 3 times, that's $1,200 for the day. That is more than enough, right? And 20 points, again, it's not really a big price fluctuation, right? So if I can nail 60 points throughout the entirety of the day, right? It could take me three trades, that's it. And 20 points, again, not something that's an astronomical target or anything like that, but if I can hit that, I'm good, right? You'll notice towards the end of today, after I hit that initial move up off of the FOMC stuff, I was done. I walked away. I poked my phone out. I said, oh, okay, 17,700. Sweet. Nice, man. We're running higher. And then I came back and I was like, whoa, what the hell happened, right? I'm not glued to it at that point. I was happy with where I was at. I nailed one for, whatever it was, $1,200. And I was good, right? I hit a couple earlier in the day too, so I had a fat day, and I didn't feel the need to try and be a part of every single move, and specifically the move that sets us up for whatever's to come next. I don't feel the pressure that I need to be a part of that. I would much rather be the guy who allows it to like really show me what's going on in terms of what our next directional move is going to be. That's just me. That's how I would prefer to operate. I don't care about being the one to call the top in a bullish trend or call the bottom in a bearish trend. That's not my game, right? I know if you go back to October, and this is the tweet that I've retweeted a million times for everybody in the world to see, but when I said I like this low a lot, blah, 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 it was literally the low of October, right? But, and you know, so you might say to yourself, oh, why are you talking about this all the time? Like, you say you don't call tops and bottoms, then you're calling bottom, right? It's a completely different story, right? I'm not calling the bottom of a bearish trend. I'm calling what would be a bottom inside a current bullish trend, right, where we get into discount. I feel much better about that, calling that bottom, because it is going towards my overall draw on liquidity where I believe that we're going, right? If we're calling top on a currently bullish trend, right, what is giving you the I guess confidence or confirmation that that is actually the top, right? Think about it. Even if you said, oh, well, we swept buy side, right? Well, if you swept buy side, you would be trying to short from January all the way until, you know, really now. And for weeks, you would have just been getting smacked around, right? So that's why I just prefer not to do that. I would rather see some sort of imbalance and from there move. It's just unfortunate that we got the weekly imbalance, but we also have a monthly fair value gap that we're currently in. And historically, go back, you guys can back test all of this, right? Everything that I'm saying here, I don't want it to feel or sound foreign to anybody. You can go back and back test everything that I'm saying right now, and kind of put a little fabric behind what we're talking about, because that, to me, until you can start doing that, then I think you're not at your fullest potential until you can start doing that, right? Every time you see one of these imbalances on the monthly chart, every single time, whether it's short-lived, doesn't matter, when price gets into them, it tends to bounce, right? So if we're looking at it from that monthly perspective, we are in a monthly fair value gap. If we, again, using historical data, this has never happened before. Could it happen? Sure, but I'm just trying to base my ideas off of what we've seen historically, right? Very similarly to this, though, right? I can argue it this way perfectly fine. Well, every time that we form a weekly imbalance, it usually tells us that we're going to start to retrace, right? That's fair. Literally, go back in time. There's a bearish imbalance right there. That's your indicator. Here's your second. Bearish imbalance. Price gets up into it. There's your short. One more time, turtle soup, bag down, okay? Price gets up into here. Why? Bearish imbalance right here. One more flush to lows, right? So it really does. This is me using historical data, using historical price action, data that we have from the past to help us aid in our decision-making process moving forward. And again, I'm just crossed here, right? I can justify this way too good on both directions. So until we get a break, whether it's a bearish order block here down, right, or we see a rocket off of this monthly fair value gap, until we see something like that, it's going to be the scalper express, and I'm going to continue looking at it from that perspective, playing it for shorter buy side or sell side targets, whether I'm long or short, playing a much more tight range, and just know that if I can nail it 3 times for 20 points, I'm going to be doing just fine. And I don't need that big home run type move, right? And even when I sold today, it was much less than what we ultimately ran up into. I got out right around here, this first bearish fair value gap right here. And you know, if I were to go back in time and say, was that the right decision or not? Well, there's 2 perspectives you can look at this from, and this is where things get difficult. Just to be fair, I'll give it to you, right? Are we bullish or bearish? I don't know. I really don't know. I'm still totally fenced on this. Again, it goes back to what I was just saying, where we had, I can give you a great bullish thesis, I can give you a great bearish thesis. I don't really know, right? So if we were to look back and we just see, all right, well, let's go run for run here, right? So inside our most immediate runs, I think it's fair to say that we are bullish. We took out this high right here with that low to, let's go to this high, discount retracement, run for highs. Beautiful, great, okay. So there would be one. Okay, now on to our next. Here's our low. Here's the high that took out this next price run right up here. Low to our high. Okay, deep discount retracement, bullish imbalance, run for high. My model's complete times 2 now. Okay, great. That's awesome. Now here's your low, okay, to your, ready? Whoops, no discount retracement. There it is. Low down here into discount, run for highs, right? That's fair, right? I think that'd be fair to say, okay, we've seen this model repeat itself over and over and over again. And obviously, we got stuck in the mud right at a bearish imbalance right here. I didn't like how we flushed completely back. I know right now we're starting to move higher, but I think one thing that we should at least note in the duration of this is what is our, I guess you could say, our little medium term setup right now. I would make the argument that it's actually bearish, right? So if we were to go back here and just look at our more recent price runs, right? Okay, so what was the price run that took out these lows right here? All right, let's come on over here and just go from our high. Oops. Ooh, come on, give it to me. There it is. High down to our lows. You'll notice that none of these lows get us back into discount. So what is that telling us? That the range is just simply not set. Okay, continue. Nope. Okay, nope. And boom. Okay, so if our overarching medium term range is bearish, inside what we have a bullish trend up towards 50%, right? Because if we do that inverse Mando model, whatever we call it, the odd nom, right? The just essentially reversed, right? We are bearish, but there's a lot of points to be had on that retracement back up into discount of the range. We can play that. What do we wait for? We wait for an imbalance in order to give us some direction in terms of how we can actually trade this. And here's your imbalance that'll just show you a move back up into here, right? Now, we got up into discount, so I think it would be fair for people to actually be looking short. We hit that weekly bearish fair value gap. On the daily, I'm not so sure if we got into anything of value just yet. No, but we did fill what would have been a bearish fair value gap right here. Okay, do you see that? How that wick from today brought us all the way back up into Monday's low? We do not have a daily fair value gap from here. Okay, just worth noting. Now, if we were to come back over to the hourly time frame, you very well could be bearish at this point. I was kind of torn. I was indifferent, right? I actually played long off of this for this move in particular. Low, whoops, to our high, right? And the way I looked at this, could we be bearish at this point? I think it would be fair to say that, right? But if we're looking, and I'll zoom in just so you guys can see a little better, but I think it would be fair if you were to say, nah, we're bearish here, we're going to melt through this low, no problem. Well, the way I looked at it was, okay, well, if I'm getting my entry down in this fair value gap here, I can use the low of the candle that created that final imbalance down here in discount of our more recent range. That's my trade idea. If I get stopped out, I get stopped out. It's not crazy. I'm not going to get absolutely smoked as a result of this, but it still gives me the best risk reward for this potential range, right? So now, even from where we rejected, right, because again, are we bullish or bearish? That's the ultimate question. And usually when we have a really good idea on the draw on liquidity, where we think we are going on a higher time frame, right? Sometimes it's clear as day. And when it's clear as day, it's easy to trade something like this, where you know, okay, oh, look at this. This is beautiful. Hold on one sec. There it is. High. We took out all this low. We took out that low with this price run. Beautiful. Okay, let's come on down over here. Bang. Here's our discount retracement into a bearish fair value gap. There's your melt for low. I don't even think the market knows if it's bullish or bearish right now. We didn't take out this low either, right? But you see the reaction to that discount imbalance right here. This would actually suggest that we are actually bearish, right, for a continuation move lower. But the fact that we didn't take out that low is pretty damn alarming, I got to be honest, right? And by alarming, what does that mean to me? Flip a coin. I still don't think the market even knows where it's going, right? I know it's all programmed, algorithmically delivered, all of that good stuff. Just in terms of what I'm seeing here, to me, there is no clear sign in terms of either direction, right? And so right now, if you've been trading this and you've been like, dude, I have no idea where the fuck price is going right now, I think it's fair for you to feel that way. I think the best thing that you could do from this is, obviously, like I said earlier this morning, you don't have to trade it, right? But monitor it and see what happens, right? Think about what your analysis would tell you or point to in terms of direction from whatever specific point. For example, maybe you didn't want to trade FOMC, right? Which would be a brilliant thing to do, in my opinion. You know, today it worked out for me. I felt strongly about where I thought price was going, and that's why I ended up playing it. But especially if you're just kind of getting going using these concepts and in the process of learning, it's probably not the brightest idea to trade a midday, extremely high impact news drop, right? Um, I think everybody can and will eventually get to that point where you understand, okay, you might get some sloppy, aggressive, volatile wicks, but price is going to do what price does, right? At the end of the day, and ultimately it did here. Um, but with all that, being said, I think it would be a good practice or a good point of practice for you to look through this throughout the day and just say, all right, well, I'm looking at this. I see that we have that discount imbalance. Like, how would I operate taking this trade here? Well, I could add it off of this fair value gap right here with my stop below the low, which we didn't tag, very close to it, but did not tag, and look for, highs, right? Even if, and you could just note, this would be something that I would consider a showtime imbalance. Why would I consider that a showtime imbalance? And I know it's a silly term and it's just something that I bring up from time to time, but I look at that as, okay, I don't know if we're bullish or bearish at this point. I think it's very fair to come to that conclusion. And, you're probably not going to hear many people with a lot of followers talk the way that I'm talking to you right now, but I think it's important to at least kind of be transparent enough with you guys to at least tell you that I don't feel great about PA all the time, right? And anybody who says that they are, I think they're probably a total liar. But I think it's just fair to say that the way we can look at this, and this is something that I do, and I think it's helpful, and of course that's why I'm sharing it with you. But if you look at, okay, I don't know if we're bullish or bearish. I like the RR potential for this move, right? But if we're bearish, this is going to be the spot where we're going to, kind of drop the ball, right? If we're bullish, this is where we're going to bounce, right? And you can kind of just map trades using that if you don't have the clear-cut direction. And why would I say these two imbalances are the most important? Well, if we are looking at this from a bullish perspective, low to your high, are we in discount? Yes. Is this our last discount bullish imbalance prior to the low? Oh yeah. Best risk reward you're going to get. You're risking 20% of the range to the downside, even less if you're using the low of the candle that created the imbalance, and you're risking that for potential 80 points to the upside, right? Now, on the flip side of that, right, why is the other? I mean, this should be a showtime imbalance as well, right? Now look at it from this perspective. I don't know if we are bearish, but if we are, this is probably where it's going to reject, right up there in discount. Bing, there it is. There she blows, right? And you can map it your trade, simply put, just like that. So I think, of course, as everybody knows, I think having an idea of where price is going on using the higher time frame analysis is extremely important, but it's not always going to be clear cut in terms of the indices, right? When you don't have a clear-cut draw on liquidity on an individual stock ticker that you're trading options on, or maybe buying shares even, what can you do? You can just go look for another one, right? With futures, you're a little bit strapped. You don't have all the options in the world, and that's why I think it's important to, kind of be able to manage with, different, I guess you could say different risk parameters based on what you're being given on a, whether it's a smaller time frame, I guess in this situation, using the hourly as a way to base my trade, because I really don't have the clearest of answers on my monthly or weekly or even the daily, right? Even look at the daily, right? You tell me. Discount of a bullish range, but our most immediate price run was bearish here, right? You tell me. This is showtime. This is going to be showtime as well if we were to end up getting back up to that point. So, and at the end of the day, what's the takeaway from this, right? I know this was long-winded and everything like that, but the takeaway should be you're not always going to have a clear-cut idea of where price is likely to go. If you don't have any other options, for example, you don't have anything else that you can particularly trade, right? I'm looking at NASDAQ, for instance, because I'm trading futures. But if I don't, for example, if I'm looking at if this was Tesla, I'm just not looking at Tesla. I'm going to look for something else. If this was NVIDIA, I'm not going to trade NVIDIA. I'm going to trade something else. But just because it's a futures ticker, and I don't really have all the options in the world to trade this, and it is the main source of my trading income, then I'm gonna have to maneuver it. And how would I do that? Just using smaller time frame windows in order for me to make those decisions, and be tight in terms of what my criteria for wins and losses are going to be in that spot. So I hope that was helpful at least. So now let me see. Sean just said, so much easier following your live sessions on TradingView. I'm charting out NASDAQ and I'm able to click on everything you're talking about. Last 3 days I felt like I wasn't seeing a direction. Yeah, me too, man. Journal on your charts. Keep a journal of screenshots. Yeah, you could do that too. Still haven't traded my futures account. Yeah, you're probably better off, man. I mean, think about all the nonsense that's occurring throughout this week. I mean, and this really, I don't want to use this as an excuse, because usually, these are, I guess it's not one size fits all, but this is not historically a terrible week to trade, right? I'm just looking at it from this perspective. Monday, no data, not really a trade day for me. Tuesday, prior to FOMC, not really a trade day. Wednesday of FOMC, the morning session is pretty much shot. You don't really expect too much, and ultimately, what did we see? We saw a little bit of life, decent setups, but no follow through whatsoever on all of the setups that occurred this morning. Right? Afternoon, you get something that's highly unpredictable, where you get a 200-point run followed by a 200-point flush. Now Thursday prior to non-farm payroll, go back into I don't know if it's in my channel or the 2024 mentorship, the week of non-farm payroll. Thursday, usually not an ideal trading day, right? And then Friday, low-key, Friday might be the best day of this week, because Friday, after non-farm payroll data, tends to be a pretty solid day, right? So that might be our only saving grace. And with all of that, you have Apple earnings tomorrow. We had a couple big earnings yesterday, AMD and Amazon. So this is a very, very, up and down, volatile type week that, to me, can just be avoided if necessary, right? You don't need to trade this. And honestly, if I was starting a futures account, I probably would not be trading this week anyway, right? As basically what we've laid out here was not really a tradable Monday. And I hate to say this, I've made money every day this week. Monday I didn't make all that much. I think I only took one trade because it was a non-data day, especially on a Monday. It ain't ideal. Tuesday, prior to FOMC, not it. It's just not really a good day. Can you make money on that day? Of course you can. I'm just trying to tell you what from my own personal experience, that basically this whole week is shot in terms of, trading high probability setups. It just doesn't really meet the criteria. So you're probably going to be much better off next week. Maybe next week you'll even have a better idea of where we sit overall on our weekly time frame. Do we whip back up and close back inside this bullish imbalance to close out the week? I know it sounds crazy, but 300 some odd points, 350 points higher, or do we create a bearish order block down and give us some answers going into next week? I don't know. We'll see. We will see. So that's I guess that's kind of just where I'm at currently, using all of the information that we currently have with NASDAQ. ES very similar, of course, but and that's kind of just how I'm operating. Now, tomorrow, I'll be the first to tell you guys. Thursday, prior to non-farm payroll, again, I want you guys to see this for yourself. I think it'll really start to click when you see it for yourself. I want you to take note of specific setups you see, and whether I'm personally not pushing any buttons tomorrow at all. Completely, I'm not even signing in. Maybe I'll look a little bit, but I will not be signing in tomorrow. And I know I say that sometimes, and I still push some buttons. But historically, and this is since I've really been tracking this, which at this point now we're going on, it's got to be close to 16 months. The Thursday prior to non-farm payroll, for whatever reason, is the shittiest day or shittiest results I have. just from me tracking my own data. It is not an ideal trading day. There are so many good setups that you see that they'll chop around for a little bit, give you some hopium, and then ultimately crush your hopes and dreams. This is something that I want everybody to watch. So if you are actively watching the market tomorrow, I want you to eye and target some specific setups. And I got to be fair, I haven't really been religiously trading the Thursday of non-farm payroll using individual tickers. I'm just coming at you from an overall index idea right now. But I will tell you that it turns out that it is by far my worst day. When whenever I have a 1K clunker, it tends to be the Thursday of non-farm payroll. So that's why I'm not signing in tomorrow. And this is something that you learn with time, of course, and practice. And the more and more you do it, the more and more you're going to start to see that there's recurring themes. What other days do you suck trading, Mando? Okay, well, I'll be honest. I've gotten better at this because I've been using data. I'm using my own trading history as a way for me to kind of create a roadmap for me moving forward. I tend to not do well on no data Mondays, right? So I'm very pick and choose with that. So what does that mean? Okay, maybe if I see a silver bullet setup, I'll take it, whether that's 10 a.m. to 11 a.m. or the 2 to 3 p.m. Eastern time. Maybe I'll take one trade, but I'll probably only go with one contract and keep my risk relatively, defined. I'm not going to, if the potential setup itself, let's say it was like a 25 point risk, I'm probably not taking that trade on a day where I haven't done as well historically on, right? Tends to be a choppier day. Maybe it's one of those days where it's just seeking liquidity and we're consolidating inside a range. I'm good. I don't need to trade that, right? I can avoid that and just take little trades here and there and be done with it. So that's another day that I stink on. What else? I don't know. I don't know off the top of my head, but those two for sure. So tomorrow, again, just to be, let everybody know, I will not be doing much of anything. And I just so you guys know, something that I think would be valuable for you is to start to think about what days you kind of don't want to look at the market for anything more than maybe just a scalp, right? Because that's totally a real thing where you're not looking for haymaker home run moves on days which historically don't offer that, and that's fine. But knowing that, and how are you going to know it? Test it yourself, right? Even if you say to me, even if you text me on a random day and say, yo, what was going on today? Like, I don't know if I wasn't seeing it well or the setups they just weren't playing out. Maybe you say that and I say to you, oh, well, you know what? I actually have a little data on this, right? There was no news, usually a shit day as a result of that. Or, oh, the day prior to blank event tends to be kind of shitty. Just based on my own analysis. And then you could start to look at it for yourself. And when you start to see that, that's something that you could note. You can build off of that. And if that's a day that, who knows? If you didn't have that little bit of information, like, oh shit, Thursday non-farm payroll day usually sucks. Who's to say that if you didn't know that information, you can get rocked. And you could, maybe blow up an account or something like that, right? We want to avoid that. And a lot of the times when I show you guys certain things, it's to kind of help you out so that you don't have to run into some of the downfalls that I had to run into, but it's something that even I'm trying to think the last time I had a really shit non-farm, because I really stopped trading them. I know August was not very good, but whatever. Really, the main takeaway here is I thought, oh no, I'm good. It don't matter. Right? I win all the time. I'm going to run into non-farm payroll. It don't matter to me. I'm still going to kill it. Maybe I had one good one mixed in there, and that misled me a little bit, and then you get smoked again. And it's like, fuck, why am I doing that? I know it's not a good day for me to trade. I should just avoid it. I should just not trade it, right? And then you kind of need to get your head knocked off one time, and then you say to yourself, okay, I'm not even bothering with this. I'm not going to waste my time here, and that's okay, right? If you were to take that 1200 increment thing that I was talking about, everybody's can be different, but for me personally, right, I kind of cleaned up today for 2.5, 3 days. So do I really need to trade tomorrow? Nah, I'm good, right? And I'm not against the clock on anything either. If next week I made $0, it wouldn't be the end of the world. But that's just the way that I look at things. I look at them from a different lens, because I know you could be stubborn and you just want, oh no, it's gonna work out this time around because I think it is, or I say it is. It's just not how it works. And if I have data, right, think about it. I'm a baseball guy, so you have all this data in terms of your velocity, your spin, your this, your that, right? You can use that information to help you get better. We can do that with trading, right? If you can journal or log your trades, that's great. Even just take a note after the day and say to yourself, okay, yep, Thursday, Friday, not farm payroll, I suck today, boom. We'll come back to it in a couple weeks. I'll review it, and then now I know. All right, maybe it's a day that I just avoid. And that really plays into the time component of the ability to read time and price. I think it is very valuable. So, let me just see this comment right now. No trade Thursday, I'm with you. Yeah, again, maybe you do great on, I'm not saying you, Sean, but maybe whoever else is listening right now, maybe that day you cook it, right? You kill it. I'm just telling you, from my own personal experience, setups look so good and then they just don't play out and they end up smacking you around. Now I learned how to use the Zoom tonight watching this. Great session. Oh, cool. Yeah. So, yeah, Sean, if you have any questions about how to use TradingView, just let me know. One thing that I use that is actually pretty helpful is this magnet right here. So what I mean by that is, like, I can just go over to, and every one I go to, it brings me to the top of the candle. Same thing with if you're marking like imbalances, it'll bring you right to, so that way you're not like trying to like manually measure it out and all that stuff. But anyways, I think that's everything. I kind of covered what I wanted to talk about. If anybody has any questions, feel free to drop them in there. But